everyone. Welcome back to Google Web3 Talks. I'm Raphael, one of the Web3 leads, and today we have Graham Friedman from the Director of Public Crypto. So thanks, Graham, for stopping by. Appreciate it.
My pleasure.
Awesome. We'll do a quick intro and we'll jump right into it. So Graham is currently, like I mentioned, the director at Republic, handling all their crypto business and digital assets. So we'll go deep into that. I'm really excited to hear what you guys are working on. And then before, he was the co-founder of TLDR Global, and then the director of photography at GoodCrack, and senior staff photographer at Veneer Media. So Graham, tell me a little bit about kind of how you got into photography and then how that evolved into your work at Republic.
Yeah, absolutely. It's a fun old photo. It seems my hair has grown a little bit since then, COVID years. So anyway, happy to explain that transition. I actually started my career, the first decade of my life was in commercial photography at Gary Vaynerchuk's VaynerMedia. You might recognize that. I've shot, basically, if you've seen the Property Brothers at your local Chase Bank, I did that campaign for a very long time. Otherwise, I ran Budweiser's commercials for many, many years. And, in a nutshell, I thought I would always be there. But back in 2009, I had stumbled upon Satoshi's white paper, and very big believer in automation and the fourth industrial revolution. And for me, Bitcoin just made sense as robot money for robots to transact. I know it's a little bit different, but that's kind of how I approached it in the general aha moment. At that point in time in New York City, that was when, in order to get Bitcoin, you either mined it yourself or you would go to a Satoshi Circle, which was sort of a meetup of the miners where they would transact and trade. And I think at that point in time, Bitcoin was about 25 cents. So it's been a while. From there, I just happened to be pretty lucky. My college roommate went into Forex trading at HSBC, Morgan Stanley, JP Morgan. And at some point in time, we discussed about trading micro assets. That led to the foundation of TLDR Global, which was our venture fund that we operated throughout 2016 to the end of 2018, the beginning of 2019. It was a private fund. We were very heavily involved in the ICO craze. And from there, that actually developed our advisory model. So the pivot from photography to crypto was literally immediate. I still sort of hold some emotional confusion about how quickly I adjusted my life and just kind of hopped all in. But again, when opportunity presents itself and you're in such an early technical stack that really nobody knew what was going on at that point in time, it was just go all in and develop. So anyway, TLDR Global was a very interesting experience. Obviously, at that point in time, the ICO boom was quite mad. And, when I look back at those assets, it's pretty funny. They weren't really doing much. Some of them are completely ghost chains at this point in time, and yet they still live on, just kind of one of the relics of open sourced data. But that led us to advise a lot of our companies as they were figuring out their go-to-market strategy. And that advisory is what we actually pulled into Republic. So at some point in the winter in 2018, we wrapped up the TLDR fund. It was private capital, so it was pretty easy just to distribute, get everybody to go their own ways. And I basically wanted to stay in this industry, was very interested, had not really been too disheartened by everything that was happening. So I took that business model that we developed over there and brought it over to Republic. I'd be more than happy to describe a little bit of sort of what we do at Republic, because we do a lot of things. So it takes a little bit of an intro, but let me know what you want to do, Raphael, and I definitely want to make this as engaging as possible and have Q&As throughout.
Yeah, that sounds awesome. Thank you for the detailed intro on that. First question is, did you get any Bitcoin when it was a quarter?
This is a lesson that I have learned many times in my life, which was that no, I did not. I looked at it and said, man, that's so interesting. I should come back to this. I did that with the crypto punks. I did that with the Bored Apes. I've done it with numerous assets that really intelligent friends talk about, and you just keep hearing the names. And now at this point in my life, every time my brain goes, that's really interesting, you should come back to it, my trick is to say, no, find some time this week, sit down, dive in, because time is precious. And of course, you know, as you're waiting to make any sort of deployment in the markets, you never know what's going to happen, and it just runs away without you. So it goes. Lesson learned.
Yeah. And I guess in the cycles that we're in, we're likely to go, there'll be so many opportunities. So I feel your pain there. I feel like I've been in that situation many times. Were there any deals made around the ICO boom that were good picks that you, I guess, are reaping the benefits of now? How's that going?
Yeah, 100%. Kyber Network was one of the really big ones that we participated in, and they're still around. And I actually leveraged them to list a lot of our client projects into the decentralized exchange space. Really solid team based out of, I want to say they're Thailand. I know they're Southeast Asia, so I might be off a little bit, but they've expanded quite large beyond that. But Kyber, really cool one. And actually our first investment and a close relationship that I lean on all the time now is QuantStamp. Now they are an auditing firm, and the two greatest bottlenecks in this industry are auditors and law firms. They both provide very specific skill sets and ones that are broadly applicable across the entire space. So we find that they're quite contentious, and you have to really queue up to get into those. But you know, QuantStamp is now crossed into the $1 billion category, so they're a unicorn. And they're really cool. Yeah, so I work with them all the time, and again, they were our first investment and our first advisory client, so that was really fun. Beyond that, I think Loopring is still out there. It's a lot of things that actually are really deep into the tech stack. So even if they are operational, you really aren't aware, right? Which is exactly the kind of stuff I would like to own as we build out this new internet.
That's really, really cool. And I'm glad to hear that you had some good picks, because I feel like a lot of the time when you're starting out a fund, it's just a lot of like spray and pray, and then hopefully you get a couple winners, but maybe not so much. Let's talk about Republic. So for people in the room that have not heard of Republic, let's start at the beginning. Like, what's the bread and butter of Republic?
Of course. So Republic, and I'll just
like that.
frame up my branding. Republic is actually 4 different companies, so it does get to be a little bit confusing. You know, I saw even in your introduction that was Republic.com, which makes perfect sense. I sit on Republic Crypto, which is a separate company, but we try to overlap and really scratch each other's backs. But just to sort of give a bigger picture of that, 4 companies. Top layer is Republic. It owns the brand. It's our top co. It has all the back office, all that fun stuff. We employ about half of the lawyers in the United States of America. So we are extremely bulky on the legal side. And that does actually come back into the core of everything that we do. So we are extremely compliant. We work with the SEC. We are extremely closely involved in the regulations, how the language works. We've even released our own security token. That was about 2 years ago. And security tokens are very cool. They open up revenue share, which is at the most fundamental level, one of the best utilities that you can get out of something. So that being said, back to our structuring, Republic 4 companies, Topco sits above 3 revenue generators. The primary one is Republic.com. Some of you may have been there. I don't know. But what Republic.com offers is crowd-funded campaigns for early stage private equity US startups. So any US startup can use our platform, unaccredited investors. It's really the only way for the general retail public to get involved in private investing. And as you all know from those articles, if you invested in, you know, Uber extremely early on, Google right at a seed level, you'd be a gazillionaire. What they don't necessarily say in all of those fun articles is that it's an extremely limited pool of people that can get into these early stage deals, whether they be accredited investors, qualified purchasers, et cetera. That basically means you need a certain amount of wealth for the regulators at the SEC to trust that you can make these risky decisions that could potentially lose your wealth. So Republic.com allows you as a startup to, instead of selling to venture capital or to really align yourself under somebody, you can go directly to the community, and basically you can use your equity as an advertising campaign. It's kind of very fun, right? Everybody can rise with you as an owner of a company. That was kind of where Republic started out, and Republic Crypto was fitting inside of that prior to my time, trying to do these crowdfund campaigns with crypto. One of the issues is crowdfunding is inherently saying that this is a security. And if you followed anything about crypto, there's always this debate of, Is the token a utility? Is it a security? It's extremely relevant right now as we have the current SEC fairly aggressive on this stance. So anyway, that being said, that's Republic Retail. Then we have Republic Crypto, I am one of the early founders of. And what we do there is we are purely a service provider. So our bread and butter is advisory. We work with clients at the earliest stage of their ideation process. And I would basically break it down into 3 trimesters. The first trimester is, what exactly is this product? We go through a definition phase. So we add clarity to the pitch, to what the idea is. Then we help them develop their token economics, the flow of utility, how the entire ecosystem will be structured. At that point in time, we're also working with law firms on how do you structure the entity that issues the token. Just for your education, those are always extranational entities. So you're never issuing a token from inside the US, and that is purely because the SEC has put up this opaque set of rules, and we don't really know what they want to see. Therefore, we issue from the Caymans, from the BVI, from Panama, all sorts of very interesting structures that kind of resemble the Panama Papers or the Laundromat. If you've ever seen that movie, it's very interesting. So that's kind of the beginning stage. Then we go into a capital raise. We're very well connected. Obviously, Republic is about fundraising from our roots. So we end up raising and assembling a cap table, usually with industry participants, a lot of the exchange funds or market making funds, anyone that we know we can get skin in the game to help this asset achieve success. And then we move on to the last stage, which is building community growth awareness. Basically trying to prep for what is one of our other offerings, a token sale. And we are fairly unique in that we can sell tokens to the US audience, which is fairly difficult. And the way we do that is through a securities wrapper. So we actually are selling an official securities issuance, whether that be a debt vehicle, some sort of convertible note, but basically an instrument that is convertible in like kind, and that like kind ends up being a token at the end of the day. Beyond that, we also build assets in our tokenization platform, where we built for Voyager. We just recently released Zedrun's token, or their updated token. Zedrun is a horse betting game. And we're even working with Google. If anyone's familiar with the Mineral team, we're very deeply involved in the ideation process there. So we're very excited. So that's kind of Republic Crypto, doing a variety of things, again, in advising, building tokens, doing public token issuance. And we have a couple back office products. It's like treasury management, and a really advanced stack for running nodes and doing proof of stake and network security, fun things like that. The last part of Republic is very much your traditional fundraising sort of department. It's a family office LP network. They had originally come from getting allocations and things like SpaceX secondaries, Robinhood, and going to their network of LPs to put together what are called SPVs, special purpose vehicles. Anyone who's been on Angel List would be familiar with that. We've pivoted that to a much more crypto focused area. And that actually led to the generation of our first fund, which I sit on top of right now. And we have a $60 million venture fund that we try to deploy into projects that the advisory team is working closely with, or people that we are just super bullish on. And that's kind of the sum total of Republic. Those 3 divisions, while independent, do try to interoperate as closely as possible. But when you're dealing with finances, when you're dealing with highly regulated assets, there's also a ton of Chinese walls in between. So it's a pretty interesting process.
Wow, thank you for that detailed explanation of like all the groundwork of how Republic operates. As you mentioned, there's a lot of like restriction and regulation in the US, and having to like create these entities in, I guess, in other countries where there's maybe a more supportive environment for crypto, et cetera. So does that mean like Republic is a global firm? Where are you guys based? And do you have like special satellite locations so you can take advantage of those benefits of being outside of the States?
Yeah, 100%. There's actually like, that's a 2-part question, actually. So in building and helping these clients assemble their Cayman, their BVI, their Panama, we also see Singapore, we see the Isle of Jersey, Switzerland was big at one point in time. Tezos launched out of there. But basically, those are all outside of our purview, right? We pass them to a legal team. We're not their legal representation. So that is to set up this entity. In a nutshell, when you're releasing a token, it's a bit of a game of whack-a-mole. And due to the US's grayness, right, we are so ill defined as to what compliance looks like here. Unfortunately, the SEC keeps saying, Gary Gensler, you may have seen, says, hey, come to us, talk to us. But everybody that's done that has gotten stuck. I mean, Facebook tried to comply as much as possible with DM. It basically destroyed their entire program. Conversely, you had Circle, who released USDC. They didn't ask permission. Now they're the dominant leader in the stablecoin space. So for that reason, it makes it very difficult for anyone to release a token in the United States, because then the regulators will just come to you. And what we have seen happen, which is very unfortunate, is they just kind of hamstring the process, and it costs a ton in legal fees. And ultimately, these companies either give up because the momentum is so little and it's very difficult to overcome, or that their legal expenses have just really taken their runway out from under them. So that's why we're pushing these tokens, again, to be issued from these entities. And sometimes these entities can even be temporary, right? Because, you know, in crypto, we're looking to not have an underlying company. We're assuming that it is all being coordinated by users, by the collective consumer owners, right? That are the democratization of ownership. So a lot of times these companies will actually push out the token and then they'll disappear. And as a result, the lawyers at large that participate in this, they try a lot of different tactics, and we've seen many different ways for releasing tokens. There's also very cool models that are actually fully decentralized, like Balancer. Some of you may have, if you play with DeFi, you would know Balancer, but they have what's called the LBP, the Liquidity Bootstrapping Protocol. That runs an auction where you actually say, start at a really high price, let's say $5. And over the course of 3 days, the price will drop to $1. And the way you're doing that is you're just saying, I'm selling gram coin. So I put in 90% gram coin, 10% ETH. And I have the algorithm automatically sell my gram coin, right? So it's moving into ETH, its sell pressure causes the price to drop. Eventually, at some point, that price, all of us are in here, we want to buy that token, right? That's why we're here. And we say, oh, I made it to like 250. That's where I think it's worth. I'm going to start buying there. And it should level off. And after the end of that 3 days, it finds a price and it distributes to everybody that is involved. So that's like a really cool decentralized mechanic. And instead of having, let's say, a company that says, hey, we're going to launch a token, you could potentially have a DAO, a group of users that are all voting on the internet. And they can, again, vote to launch that asset. That takes the centralized founder and developer sort of a step removed from the decision-making process. And again, these are the games that we have to play, which is like, how can we disconnect me, the founder and developer, from the actual asset that's floating around the internet? And we're really just going through a variety of ways to break it up. Now, just to come back really quickly to the end of your question, is Republic international? Yes, we have acquired Seedrs, which is a crowdfunding platform in the UK. So we do have a British presence, and that extends into Europe. And then we've also recently acquired a company similar in Korea, and we are setting up a variety of business offerings in Singapore. So we're pretty spread out, and we view, you know, the internet as kind of a single world. And the longer you're in crypto, the less you start to think about time zones and geographical divides, and you know, we're all on the same internet. Well,
very cool. Do you see, what do you think are the unique value adds of of Republic Crypto, or maybe Republic as an overall entity, in comparison to the other crowdfunding, like, I guess, companies out there? So like WeFunder, Stonks, etc.
Yeah, absolutely. So, I mean, again, that's like very separate from the crypto department. I would say they're all very interesting. We want to see as much crowdfunding go live as possible, because all of this is rather experimental. The crowdfunding, the Reg CF law only came into existence in 2012. What?
Reg CF, can you describe Reg CF for people?
Yeah, absolutely. That just means regulation crowdfund, you know, just to simplify it. The way it works is, if you're offering a security, you have to register with the SEC. However, they have some exemptions saying, if you follow these rules, you are exempt from a registration. The standard ones that we would usually see if you were working with AngelList would be Regulation D, which just means accredited investors. I'm sure everyone's familiar if you've ever made an angel investment into anything. Obviously, accreditation rules, I think there's a lot of problems with those. It's a big gatekeeper, and it's kind of a rich get richer kind of thing. There's Reg S, which is a looser rule set or exemptions, but it's basically saying you're not selling to the United States. So hence it's looser to only people outside the US. Then there's A+, which is like a mini IPO. It means you can go nuts. You can, scream at the top of your lungs that you're selling this thing, but it has a threshold of 75 million, and all sorts of people can come in and you can, market it and raise a ton of money around it. Now, those were really the ones that were, at large for the longest time. And you can see that really does keep out mom and pop, right? Anyone that just wants to put in like $20, $100 to some cool startup. That's where CF comes out in the Jobs Act in 2012. And that allows retail investors through some limited licensing, which WeFunder has, we have one, to be able to come into these companies and have a piece of ownership. And what is cool is, again, rather than using it as just a purely fundraising mechanic, you can also use it as a mass marketing campaign, right? You're bringing in awareness, but you're also bringing in owners. And it's a fun, different way both to raise money and to raise awareness.
Gotcha. And prior to this explanation, you were describing kind of the nuances of how companies might decide to mint their tokens to provide access to users around the world. What patterns have you noticed after the financial environment has started to like battle test projects through this winter? Are you noticing companies pivoting to a different method of either like building their tech or deciding how their tokenomics should be designed?
Yes, absolutely. So the winter time is our favorite time. Are just far too noisy. 2017, you just hear talks of scams, right? And then we went through the whole winter. You get back to the builders, to the people that are here because they believe in the technology. You get used to it. Then we get back into the uproar, and suddenly everybody and their mother comes out and says, "Hey, I want to sell this pen. I'm going to slap a token on it," right? And that gets to be a little bit disheartening. So in that regard, that's where we do see the irrational exuberance, the sort of hubris. I think we saw a lot of that with Terra, which even myself, I resisted that thing forever because it was a pretty clear Ponzi scheme. But at the end, you start seeing their amazing user interface, and it's like, oh, they have a really Web 2 vibe to them. You can click, you can deploy, it's all very easy. And of course, that got like overbearing, and it unfortunately collapsed quite brutally. So, what we're seeing as a pivot, the biggest change is that in a bull market, everybody's valuations inflate tremendously. You start to see seed rounds at like $100 million vals. All of this like craziness where it's just, okay, cool. You have a cell phone game, that's maybe fun for 10 minutes and you're raising at $400 million. Like it gets to be complete ludicrousness. And of course, there's younger funds, people that are just racing to get in. So like some of these people fund each other themselves, all very crazy. But now as it's all deflating, the valuations are coming down to earth. So from an investor side, it makes a lot of sense, right? We can actually start to deploy money into things that are rational. Even as a retail investor, right? I didn't actually buy any crypto on the upswing. It was all far too expensive for me, and I felt like I was just chasing other buyers. So what's the point? Now that we're back down, I think it's a great opportunity to look at a lot of the assets, and some of them are great. I mean, there's revenue producing protocols out there, and now you can start to accumulate bags. And one of the big things is you really want to get to long-term capital gains, right? So you need to hold these things for 1 year. A bull market generally doesn't even last a year, so it's just not a good position to start acquiring assets. Right now, there's less builders because anyone that thought it was easy money is out. They've given up. They realize it's actually very hard. I will say crypto, while there's a ton of wealth to be gained, it's not easy. It's hard work, just like everything else in life. But luckily, now all of those scammers, they start to disappear. So people are learning. I think there's definitely more stuff on the back end. So like, how do they manage the treasury once they've gotten all of that capital? Are they putting it into a multi-signature safe where multiple people have to approve any sort of capital deployment? So there's less of a chance of me running away with all your money. And we're learning. DAOs are a big part of decentralization, which is to say we've taken DAOs are basically a board of directors on the internet. And how those are operating is maturing tremendously. I think that's probably one of the biggest spaces, because during the last bull run, people said, hey, this token has governance, it has utility. Well, I don't agree with that. Not a very good use case. And then a lot of people have been completely mired in their decision making because they want to move the project forward. They've got to go to the community. Every person in the community has a vote. It becomes herding cats. So there's a lot of evolution happening simultaneously. Less probably on how they're designing their tokens. Obviously, algorithmic stablecoins have a lot of their wind taken out of their sails due to Terra, but there's still a ton of exploration in governance. How do we operate these things? How do we incentivize people to go full time while not being a W-2 employee, right? So all of this coordination stuff, I would say, is at the forefront of experimentation.
Gotcha. And then of those things you mentioned, which are you most excited about?
Yeah, absolutely. So I'm still as excited as I ever was about infrastructure. I don't think we're at a place where this is easy. People are getting their capital exploited all the time. We just saw this on Phantom Wallet, a Solana-based wallet this week, where a wallet project who was poorly constructed and not audited just ended up giving away private keys. That's like probably the worst thing you could possibly do in this space, basically saying we went into your bank and we just took your money out. But I am really excited about DAOs. So as I mentioned, one of the reasons I got into this space was I saw sort of that fourth industrial evolution, us moving away from showing up at the office for 40 hours a week and making X widgets over Y hours, and thinking that, we could find a new mechanic by having businesses on the internet, cash flows. I really think that ultimately what we're doing is we're reshaping the entire model of value. We look at value as money right now. I think the term money is honestly going to disappear because once we stop touching fiat paper, why do we even need that? It's really just a digital number. We're basically there in the credit card world without crypto. And then when you look at the internet and the way that data packets move, and we started with emails and now we're superimposing bunny faces on ourselves in real time. What does that look like when we extrapolate data and moving, or I should say value moving at the speed of data? And surely we can build some really interesting, funky stuff, a lot of which we can't even ideate on now.
Gotcha. And then in terms of there's companies, all these Web2 giants like Google and Apple and Amazon, Microsoft. What do you think we could be doing to help the Web3 kind of movement evolution happen? Are there puzzle pieces, or you mentioned infrastructure? Of course, that's super important. It's native to what Google Cloud's business does. Are there any things that you think, gosh, if I could just have this, it would make so much more of this other thing possible?
So, I'd say there's a couple things. The two are very different, right? Like traditional business is about value capture and Web3 business is about value distribution. So to some degree, they're at a slight odd. And I would say that in between, I kind of refer to as an uncanny valley, where we find a lot of traditional founders have a hard time breaking that model. Like, how do I get the value to me? And it's like, well, you got to give it away. It's like literally the opposite. However, open source coding is the foundation, right? That everybody can see what's going on with our money. That transparency is extremely important. So contributions to the open source space is phenomenal. There's a variety of things inside of GitHub. There's a DAO that gives away grants specifically for Git developments. Really cool project out there called Canto, C-A-N-T-O. That is literally some of the best developers just throwing decentralized finance code into this public repo that nobody will own. It's under Creative Commons, just to say that we have tested, verifiable, and audited code that anyone can pull from, so that you don't have to write your own sketchy stuff, right? And one of the problems is that auditing is, again, it's hard, it's slow, and it's expensive. So a lot of people just skip over. But crypto is sort of like hardware in a way, that once you ship, it needs to be perfect. There's no iteration on it like software, because you're dealing with people's wealth. That's all. That's what I'm trying to get at. So you just got to make sure that there's no exploits, right? You can't just patch something that's horrible if everyone's already lost everything that they have. So yeah, I mean, that's kind of where I'm at with that question, and I think I've lost my train of thought. So let's.
No worries. Yeah, I want to dig on this a little bit more because everyone on the call obviously has an interest in Web3, and maybe we are working on it, or we're curious, and so Google touches so many surfaces, and I'd just be curious to know, do you think Google has a role in the Web3 future? And maybe what should that be?
Yeah, I mean, everyone in technology does. So it's about contributions and finding what you can do, right? If you're a developer, I think that's the easiest way you can actually learn some of these new languages. You can deploy things that are helpful. You can, again, give away your value. That's like the most core tenet of this place. And I think that's where a lot of older people have a harder time entering the space, while you see young people are just, extremely bright and full of like dreams and don't mind kind of giving away some of their value. Aside from that, though, the pursuit of decentralization, we're in a place where everyone's trying to decentralize everything. And I think we're learning that a lot of centralization works really, really well.
Yeah.
Obviously, we get speed, efficacy, utility, all of that. So being able to take the learnings from the systems that you have that do work and say, hey, we can maintain the security and sort of the democratized groupthink of decentralization, but we can take certain points and centralize these things, right? Maybe not all of the processing needs to happen on Ethereum, the global computer, because it's expensive as all hell. So, I think to take your systems knowledge, to take your programming knowledge, just seeing also systems at scale, what works, what doesn't. And a lot of this is, this was tried earlier in the 80s and 90s with Web 1.0. And the ideas are very much the same. It's just about bringing them back. So we actually find a lot of older like Linux devs and cypherpunks from that era are just kind of saying, hey, you don't need to relearn this lesson. So also just teaching the younger generations what you've experienced, always very helpful.
Yeah, I've heard the quote, Web3 is really just the world relearning what we already did the last 1,000 years, but doing it 1,000 times faster. So it's funny how the ethos and tenets and maybe the lessons learned, it's just like a resurrection of it all for maybe I shouldn't say younger generation, because maybe it's all generations, but just like, hey, we tried this before and some parts of this are great. I guess that being said, I know you vet a lot of companies and you get to see red flags, green flags. What are some of the most important red flags that you see that turn you off on a deal?
Sure. So lack of auditing is like a very easy thing to look at, because those reports should come in pretty standardly. The other is what is like the structuring of basically how they're going to deal with their money, right? If I see a mature project, like for example, I saw one today, there was a complete breakdown of how they're going to manage all of their tokens. So they already had the wallet set up of what the public treasury would look like. That means the second they start minting, you can go in there yourself, right? You can start to look at it, you can audit it, where different elements are receiving to. They had the multi-signature wallet of their safe, which is taking the investment revenue. So I, as an investor, can send you $1 and I can watch that dollar, make sure you're not spending it in any sort of like sketchy way. First and foremost is always going to be the team. We want to see, some experience there. It is tough because crypto is a combination of deep legal knowledge, of game theory, of day trading, of the public markets, of the private markets, of technology, of gaming and coordination, right? There's a lot of things that were disparate that come together. So even some very technically proficient people may not have a load of experience in just protecting and managing millions of dollars that they just raise super easily, because it's, it comes in so fast. So big red flags would just be not having, clear understandings. I always look for technology first. That's where we attack. And I will send it to our developers. We have a diligence team. We want to make sure that there's both sound code that has, again, been audited or will be, and that there's sound logic behind it. We don't want any loopholes. Most of the exploits in blockchain are logical exploits. They're not like code hacks. It's just that, oh, I see that you missed a gap, and if I tell you this, I can get that as a result. And then beyond that, it's, do they have a clear vision? Like we really want to see, prior to giving somebody money, that they know what they're going to do with it, not that they're kind of taking every step as just a gate or a hurdle to overcome and then move on to the next one. So those are probably the biggest things I will go for, which is like diligence the tech, get to know the founder, and if you can't talk to the founder directly, even though you often can in crypto, which is very cool because it's so open and so community based. But to try to get a sense for, are they legitimate? Are they going to stick around after they raise capital? One big thing is, what does the team token look like? We usually say like 15% to 20% is the max that we would want to see. We also want to see those tokens locked up for like 3 to 4 years, maybe even longer. Maybe the cliff is at 4 years and then the vesting goes for another 3 or something. But the team should always be committed and not getting rewarded too early on. So those are some like basic ways to start looking at things. Gotcha.
And when talking about rewards, I want to step into DeFi a little bit, because DeFi summer was this explosion of opportunity with these ridiculously high like interest rates or APYs. And I think a lot of us probably thought there's no way this is possible, but I may not want to miss out on the opportunity. So what's kind of your thesis now after seeing, thousands of percent, whether it was on like Olympus DAO or other projects? Like, do you think those days are forever behind us, or were there other elements of that we might see a resurgence from?
Sure. So DeFi has actually had like 2 runs. There was the initial DeFi summer, which was 2019. And that gave us early protocols like Aave, which was originally called ETHLend. We had SNX coming out. I love Thorchain, so they popped up at that time. Curve sitting at like the heart of all of this. And a lot of those projects just laid down some very solid codes that are like broad money markets for stables. And that's extremely important, that the stable coins have a velocity of movement and that they're being lent, right? That's ultimately how an economy grows. So that DeFi summer, those things went straight up and then they kind of collapsed again in value, but those protocols churned and they were building the rails for public transactability. I'll also throw Uniswap in there because really before DeFi summer, there wasn't much going on in the decentralized exchanges, and those have grown tremendously. Like I can't talk about DEXs enough. They're awesome. The second one, which we would call DeFi 2.0, was the rise of Ponzonomics. Ohm being the leader of that game. And I think, honestly, we will not be returning to there will always be people throwing out crazy high APY as an attempt to onboard. But again, anyone can fire up a financial protocol. So you have to look at who are these people, what is their goal. Of course, one thing I didn't say in a red flag, but with any token project, just look at the mechanism. And if you remove the token and you think, hey, this could still work, then it probably doesn't need a token. If you remove the token and the whole thing falls apart, then that token has value, and that makes sense. So if you look at a lot of the APY things, the tokens had no reason to be. They would just say, you get a token, you stake a token, we give you more of the tokens. There's no real need for that. There's no utility underpinning it. So I think a lot of people will be afraid of APY moving forward. That being said, there is real yield out there. Proof of stake, which is adding security to a network, is perfectly valid yield generation. So I think a lot of people will be looking at that in the future.
Gotcha. And then do you have any favorite DeFi projects?
Oh yeah, I mean, I'm a bit of I like beat a dead horse on Thorchain, which has a very funny name. But Thorchain is a very cool way to trade, let's say, native Bitcoin for native Ethereum. What it does is it creates giant vaults. So if you want to basically trade Bitcoin for ETH, the Bitcoin goes into a Bitcoin vault matched with their native token, and then there's an Ethereum vault matched with their native token. It does a buy and a sell on both sides, and then the network just compares the orders and makes sure that they're all aligned. What I really like about it is that it has security at the center of it. It's fully decentralized. They launched from a decentralized team from the beginning. They've been exploited like 4 times over the course of 2019, 2020. So they've actually spent a lot of time to repair and look internally and fix their flaws. And they're really cool. They have a business development unit that fully pays salaries on 6 white hat hackers to constantly be looking at code, reviewing everything. And there's just a really a juicy amount of mechanics. The reason I love that is because it allows native Bitcoin to move into DeFi. Everything else like wraps Bitcoin, which means there's like a centralized custodian holding your Bitcoin. All of this defeats the purpose. Otherwise, I mean, all of the money markets that sit at the center are truly phenomenal. So Curve, Aave, synthetics. They're really powerful tools that have allowed the industry to build the beginning layers. And then, of course, MakerDAO is really fascinating if you want to look at how people are trying to build these quasi businesses online. Maker is now turning into a corporate structure, which is going to get legally nebulous, but it has been a really interesting way to watch what they're doing. And just so you all know, Maker's whole goal is to issue a stablecoin on Ethereum. It's called DAI, D-A-I. And they have a huge war chest, so they've started to acquire real-world assets. They even have a bank now that will store $100 million worth of assets on their behalf so that they can issue this stablecoin. So it's a really interesting experiment.
Wow, that is really cool. I didn't know that about Maker. I'll have to do some reading on that. So within Thor, do you know Gavin McDermott?
Yeah, he's great. He runs nine realms.
Yeah. So he's a buddy of mine back in Phoenix.
IDEO collab.
Yeah, when we were before we got into tech in 2015 or something, maybe we were like hanging out in Phoenix, like we should get into this blockchain thing or something.
Yeah,
maybe it was before then actually, and then now he basically is going off to take over the world. So yeah, that is really awesome. So we're gonna get into Q&A quick here, but I had one more question. What are some like maybe lessons learned or just like kind of little tips and tricks you might want to share with people who are kind of maybe want to dip their feet into investing in Web3 projects or just like angel investing in general? And there's no right answer here. Go for it. Whatever you think is good.
For sure, 100%. So, the core thing is to spend time with projects, right? They should be accessible. If you start banging on their door and no one answers, that's a big red flag. But you should be able to go into their Discords. Telegram is kind of a noise factory, so I don't think you'll find much there. But you should be able to find their code on GitHub. That's a very easy way to see, are they shipping product, right? Like you can actually see when that code's being updated, when patches are being fixed, et cetera, et cetera. That's all of this should be visible. You should be able to hop into the community. Is the community talking? Are they active? Are they contributing? Is the founding team answering questions? These are all the soul of a project. And the longer I've been in a place, the more I actually think the soul does matter. There's some that are launched very professionally in enterprise, and they just like never catch with retail because, again, they're very stuffy and they don't necessarily reflect the ethos of the space. Whereas Ethereum, if you go into the Ethereum community, it's like Wikipedia, right? Everyone's just there to learn, to give information, to get information, to grow the product together. It's a truly unique and amazing thing. So in that regard, pay attention to a project. If you like a project, hang out with it for a while and observe the price. If the price is going up, it's very stressful to chase it. Obviously, you'll be putting yourself in what is called exit liquidity position, right? The people who bought cheaper than you will be looking to sell onto you. So I stick around, I learn the projects I like, and then when we suffer these downturns, every now and then you'll open, CoinMarketCap, CoinGecko, you'll see double digits in the red and you'll go, oh my God, I shouldn't be here. And that's exactly when you want to buy the stuff. And then one of the biggest lessons and the most difficult part for everyone I know is that when we get in the bull run and everyone says this time is different and everyone feels amazing and people are quitting their jobs, that's probably when you should exit. Go back to cash. But that part's hard. I generally hold on to my cryptos forever.
Yeah. So actually, I have one follow-up on that because, and by the way, everyone, obviously, this is not financial advice. Do your own research. But do you think we're at the floor? Is it now a good time to enter?
Yeah, so obviously a really difficult question. Generally, these cycles are tied to the Bitcoin halving. Bitcoin halving is about 2 years away, so oh my, it's a long time. However, I am of the mindset that we did get pretty substantially hurt, both due to macro uncertainty, and that was in parallel with all of these lenders collapsing. So what I saw was that at an $18,000 Bitcoin, all of the insiders were frothing. At a 3-digit Ethereum, all of the insiders were frothing. When we hit those levels, basically everyone that is all in on this game was beginning to sell the houses that they bought with their crypto profits, selling those Lamborghinis. Everybody was getting out of their real world assets to get money to get back in. So all of the insider interest to purchase makes me think that that was really our bottom. And now we seem to be like, okay, maybe we're not going into a recession. Maybe the global food crisis isn't going to be so much of a crisis. It's just going to be a sort of a downturn, but manageable. And again, as that uncertainty washes away and we just continue to go into a world of inflation, this is technically supposed to be the inflation hedge. So I actually think we're not going to be stuck to the Bitcoin halving cycle like we have in the past. And I actually think we're moving more towards the global computer that is Web3. The more that Ethereum builds, right, we're about to have the merge where Ethereum goes from proof of work to proof of stake. That's significant. That really, we haven't seen a network upgrade of that caliber since Bitcoin kind of split into BCH, which was back in, I think, 2017. So this is a massive event, and this means that the world's computer can operate in a more healthy and robust way. Obviously, we're getting the Facebook companies came out, so that's Aptos and Sui, who just released a new language called Move. So you have a language that's easier to code in, which means faster product release, better rollout times, the whole shebang. So I think we're in a really healthy place. I have personally started to acquire projects, again, that I've been looking at, that I have my heart on, that I think, have really strong teams who have proven to be there and, respond in bad times and support in good times and all of that. And then, of course, the standard way is to just kind of buy a little over the course of time so that you're averaging your costs. But yeah, I think we're in a fairly healthy place. Like worst case scenario, we drop down to like 20K and we bounce. We probably go flat for a long time. So at this point in time, you could just sit around and wait. And anytime you see a ton of red, just throw a little bit in. And every time you see green, you're going to get really excited, but gotta simmer down.
Roger that. Dollar cost averaging, everybody, because we're over time here. But thank you so much, everyone, for your questions. Graham, always a pleasure. So glad we could hang out. And so we'll have to have you back because obviously there's a lot of interest. So many people showed up today. We want to throw your socials in the chat in case people want to follow you or send you a thank you.
Yes.
Awesome. Thank you so much. So make sure to grab that and send Graham to kudos because this was super helpful. Thanks, Graham. Thank you, everybody else. And we'll see you next time. Have a good day.